The ingredients behind this rally are very much in play, and if I'm not mistaken, you think international could do even better. Andres Garcia Amaya is the founder and CEO at Zoe Financial. Good to see you. Do you want to start with the U.S. or international? I mean, everywhere you look, there seem to be positive signs.
They have the same ingredients for success when it comes to earnings growth, monetary policy that's accommodating, and then call it a rolling growth on the GDP side. So not stellar, but also not low enough that it becomes an issue.
Tim Seymour yesterday said deregulation he thought was a big theme as well, especially in Europe for some of those financials.
So exactly. So what I was going to say to a certain extent is that up to there, same ingredients, but Europe and international in general has one more ingredient, which is valuations are much more attractive. Right, so better entry point, even after they were up significantly higher than the U.S. last year.
Yeah. So it's always made sense that they should trade a little more cheaply because in recent years they haven't done so well. They don't have the GDP growth and so forth. But you think they're going to overcome that?
The biggest difference has been earnings growth has seen an inflection for them that started last year. Ultimately, earnings growth drives stocks, right? And it has been a value trap for a number of years because the U.S. earnings growth looked like this, and they look flat. Last year, you saw that inflection point of earnings growth. And as you know, it's not only earnings growth, but the expectations are still pretty muted. So they don't have as high of a bar to beat versus in the U.S., as you know, right, expectations are pretty high to begin with.
Right. So in the U.S., and I take your point on that. We did talk a lot about, how he thinks, sounds like you think these runs could keep going internationally. What about in the U.S.? I mean, what is the recipe for the rally that we're seeing? Why do you think we've had such a strong start to the year?
Yeah, to a certain extent, there hasn't been a shock to the things that has allowed it to work, right? So earnings growth continues to be strong. If anything, is broadening beyond the Max 7, which is a positive and potentially a good new driver, if you will, this year versus last year. You also have the idea of monetary policy not being an issue. If anything, they could cut one or two more times. And then lastly, the economy has held up. If anything, is showing some signs of reacceleration, right? You throw all those in and nothing has changed from December 31st to the beginning of January.
The economy, you think, is reaccelerating even with a kind of weak labor market?
Yes. So that is, let's put it this way, there are potential risk here to the equation, right? Which is the job market is not improving, slightly deteriorating, but not enough to send the economy into a recession, right? And that's kind of where we have to kind of keep an eye on. And then the other one you have to keep an eye on is if inflation stays in check, monetary policy could stay accommodative. So those are the things to watch for where all of a sudden the story could be very different this year versus last year.
Right.